Despite recent price volatility, former Goldman Sachs executive Raoul remains bullish on Ethereum and the cryptocurrency markets. According to Powell, crypto hedge funds that suffered significant losses during the recent market turmoil are underweight ETH as the merge. Ethereum's transition to a proof-of-stake consensus mechanism approaches. According to the Real Vision founder, markets follow the path of least resistance, which is currently upward for ETH. In this video, let's find out what's happening. Stay tuned. Even in his worst-case scenario, Real Vision CEO Raoul believes Bitcoin can still erupt and outperform other asset classes over the next 10 years. In a recent roundtable discussion on the 𝐥𝐤𝐤𝐞 YouTube channel, the former Goldman Sachs executive explains how, when compared to less risky investments, the more extreme an asset's inherent volatility is, the higher it could potentially multiply in price. The reward is given by volatility. Because it's a 70 vol asset, it gives these 20x, 50x, and 100x rewards depending on the time period. The merge, I believe, is still underweight. There will be a spike and a pullback as people enter the merge or post-merge. See, it's going back to the low, many people will say. My guess is that it corrects sideways, then does something before exploding higher. People are not simply wired for that because they are mean reversionists. They believe that the world is cyclical and that everything reverts to its previous state, so that every boom has a bust, and every bust brings it back to where it began. But that is not the case here. It's in an exponential trend, so every bust is significantly higher. I'm talking about Bitcoin $4,000 and Bitcoin $20,000. That is exceptionally low to low, but people don't see that. They're not accustomed to it. They have no idea how to deal with it. People are being forced to learn. We all did. Powell goes on to describe his experiences as an early Bitcoin investor when the asset was still worth far less than $1,000, noting that he believes BTC will eventually be worth $100,000 at the very least and could even reach $1 million. I had no idea that in an exponential trend, buying and holding and adding to the big sell-offs is better. I went back and looked at every time I traded Bitcoin starting in 2013 when it was only $200. It rode up to $1,000, so it increased 5 times in 2 months before falling 85%. I just kept it because I wanted to think of it as an option. I had a 10-year perspective. I predicted that it would be $100,000 in the worst-case scenario and $1 million in the best-case scenario over the next 10 to 20 years. Powell concludes by mentioning his other crypto investments, which include Ethereum, the leading smart contract platform, and Solana, a competing Layer 1 protocol. I have a variety of tokens. My main bets are Ethereum and Solana, but I'm not sure if Solana will be anything or not. I believe it is because network adoption appears to be as high as anything else, but the world can change quickly. Aside from that, I have a basket of equally weighted items because I assume I'm an idiot who can't pick the right things. That's why I established a hedge fund, because I'd rather give my money to a group of people whose job it is to go out and find the next 100 or 1,000 times than try to do it myself because it's complicated. Just a small basket of stuff, just keeping an eye on everything, seeing what moves and how it works. At the time of writing, Bitcoin has stabilized from the August 18th correction, trading for $21,330, down less than 1%. According to the macro expert, crypto's relative underperformance this year can be attributed to an unexpected tightening in central bank liquidity, which he previously predicted would change. From my perspective, I believe the macro is the big surprise that caught most of us off guard. Not so much the macroeconomic impact as the impact on cryptocurrency. To begin with, when real wages are negative, people have less money overall. It is still primarily a retail investment market. Then there's the withdrawal of central bank liquidity, and if you compare M2 to Bitcoin year over year, it's basically the same. It indicates that as money leaves the system, less money is available. What were your thoughts before and after watching this video? Let us know in the comments section. Also, make sure you are subscribed along with turning on the notifications. Stay tuned for more videos.